Hello traders, welcome back to the Forex Gig, and in today's video we are going to be diving into a powerful and precise strategy that can help you filter out false signals and capture the most profitable trades. The double MACD strategy. This approach uses two MACD indicators to give you a clear picture of the market momentum and trend direction, allowing you to make more informed trading decisions. If you are looking for a way to improve your timing on entries and exits while maximizing or minimizing your risks and profits, stay tuned until the end of this video and you will learn exactly how you can set up this strategy, when to enter and exit the trade, and how to manage your risks effectively. So let's get started. We have to first of all understand what the double MACD strategy is all about. The moving average, convergent and divergent, or the MACD, stands for one of the most reliable trend following indicators in the forex market. When you combine two MACDs with different settings, we create a robust system that can help us identify stronger trading signals and filter out market noise. So this is the basic MACD, this particular one up here, and this is the second MACD that we'll be using. The first MACD is typically set with standard perimeters. The standard perimeters are the 12, the 20, the 12, the 26, and the 9. These are the standard perimeters for the standard MACD. While the second MACD, often used, is faster setting. The second MACD we are going to be using is going to use a faster setting, using 5, 15, and 1 to help us fine-tune our entries and our exits. The beauty of the double MACD strategy is its versatility across different time frames. You can apply it to any current pair and any time frame, from the 15 minutes to the daily, and from daily charts to swing trading. You can apply it in any of this your trading strategy or trading time frame. The principle remains the same. Wait for both MACDs to align before taking your position. As you can see, we can apply this strategy to any time frame, either the 4-hour, it will still give us the same results. The MACD works in all the time frames. How to use the double MACD strategy. Let's see how this strategy actually works. This double MACD strategy operates on a simple principle. When both MACD aligns, they create a high probability trade opportunity. Let's break down exactly how this works in the real market condition. The first step is to identify the primary trend using the slower MACD. The slower MACD is the standard MACD. When we are able to find the trend, because this acts as a trend filter, telling us whether to look for buying or selling opportunities. When the slower MACD is able to be above its signal line, you only take long trades when it is above the signal line. The signal line is this yellow line over here in the standard MACD, while the MACD line is the blue line, as you can see here. So when it is above the signal line, you can only take long trading opportunities, and when it is below the signal line, you would only take sell trading opportunities. As we can see from this trading opportunity, when it is above the signal line in this particular area, we can see the market is trending to the upside. But when it was below the signal line in this area here, as you can see in this area, when it was below the signal line, price was in a downtrend. So we would only look for opportunities according to what we can see from our standard MACD, while your faster MACD then becomes your precision tool for timing entries and exits. It responds more quickly to price changing, helping you catch the beginning of the moves while avoiding late entries. As you can see, if you want to enter at this area, the MACD line gives you a clear opportunity to do that. The faster MACD line, when it start trading to the downside, you know, yes, this is actually going to be a selling or whatever trading opportunity is what you are going to capitalize according to the faster MACD. The strategy becomes powerful during strong trends when both MACD shows increasing histogram. When both MACD shows increasing histogram values, it indicates strengthening momentum. This leads to the most profitable trades. Remember, divergence between price and either MACD can signal potential trend reversal. When you spot a divergence on both MACD simultaneously, it's often a signal to either exit your position or prepare for a trade reversal. So do not ignore any sign of divergence between the price and the MACD indicator. The key to this strategy lies in patience, waiting for both MACDs to align before entering a trade. This might mean missing some moves, but it is also essential because you are going to be taking high probability signals and high probability trades with better risk to reward ratio. So let's see a step-by-step guide to implementing the double MACD strategy. Now that we understand how the double MACD strategy works, let's walk through the exact steps to implement it in our trading. This process will help you set up your charts, identify trend signals, and manage your risks effectively. After setting up your indicator, after setting it by the standard one, you set it using standard settings of 12 for the period EMA, 26 for the period EMA, and 9 for the period signal. While the faster one, you use 5 for the EMA, 15 for the period EMA, and 1 for the period signal line. These two MACD will work together to filter out noise and pinpoint high probability trade. So you have to identify the trend direction before entering any trade. You need to confirm the trend direction using the slower MACD. If the slower MACD line is above the signal line, it is an opportunity to indicate that we are looking for uptrend, and you should only be looking for buying opportunities. Once the MACD line is above the signal line, you should only be looking for buying opportunities because this is a signal that shows that we are in an uptrend. At this area here, you can see it. While when the MACD line is below the signal line, it shows a sign that we should be in a downtrend, which is we should only be looking for selling opportunities. This dual confirmation ensures that you trade in sync with both short-term momentum and the long-term trend direction. You would also want both MACDs to show a golden cross. When the MACD line crosses above the signal line before you enter your trade. Now let's see how we can look for entry signals. Once you have confirmed the trend direction with the slower MACD, it's time to look for entry signals using both MACDs. You would want both MACDs to show a golden cross. It has to show a golden cross when the MACD line crosses below the signal line before entering the trade. This dual confirmation ensures that you are trading in sync with both short-term and long-term trend directions. You need to also know how to manage your risks with stop loss. It is essential and crucial for any trading strategy. For each trade, place a stop loss just below the recent swing low or the recent swing high for both long and short trades. This helps you protect your capital in case market moves against you. So if we are to enter this position, we find out that the market is trading above the signal line and this is above the zero mark on the second MACD. Would quickly enter a trade and we are to put our stop loss just below the recent swing low. This is where we place our stop loss, and this is how we manage our trades. We must protect our capital in case of the market moves against us because no strategy is 100% foolproof. How do we exit our trade? To exit our trade, we have to watch for a dead cross when the MACD line crosses below the signal line on either of the two MACDs. When it crosses below this line, I had to quickly reset my fast MACD indicator to make it more visible to us. So we exit the moment we see a dead cross. When both MACD lines crosses below the signal lines, that will be our exact place of exiting our trade. So in this trading example, we would exit our trade in this area when we see it has crossed each other, when the MACD line has crossed over the signal line. This indicates that the momentum is weakening and it may be time to close your position. Alternatively, you can exit at key support or resistance level. You can check back in time to target previous support or resistance level in price where you might be able to exit your trade. Like this area here, this area was a previous resistance level, so you can take your trade off that area. Now we have to optimize based on the market condition. The double MACD strategy can be adapted based on market condition or specific currency pairs. In more volatile markets, consider shortening the period of both MACDs to capture quicker move. In slower markets, longer period might help filter out unnecessary noise. This is how you would optimize your MACD, by going to the settings to make it a bit easier according to whatever pair you are using to trade. This is literally your setting area where you set the MACD according to how you want it to trade. Consider following these steps carefully and consistently. You will be able to implement the double MACD strategy effectively in your trading routine. If you can follow all the steps we talked about in this strategy, you will be able to capitalize on this trading strategy. Alright traders, we have come to the end of this video, the double MACD strategy. By now you should have a clear understanding of how to set up your strategy, identify trend, direction, time your entries and exits, and manage your risks effectively. If you found this content helpful and you want to see more strategies like this, do not forget to hit the like button and subscribe to our channel and turn on the notification your notification bell so that you wouldn't miss out on any more updates. Stay disciplined, trade smart, and I will see you in the next video.